Hello, everybody, and Happy New Year's. So, 2025 is coming to a close, and as I watch 2026 approaching from the horizon, I'm eagerly planning with one goal to continue improving and growing my portfolio. I'd like to proceed with business as usual, so I'm following my protocols and maintaining my focus. Today, we'll be talking about the two stocks I'll be buying for the month of January. We even get a brand new position for the brand new year. I know the list is small, but I only have the limited money I set aside for my nursing job to invest. This means a loss of capital is hours of hard work evaporated, so I need to use surgical precision with each decision that I make. If you're new around here, welcome to the Night Shift. We're a group of dedicated, full-time professionals who do the hard work of investing while the rest of the world sleeps, because life never stops and we have goals to achieve. Okay, so before we talk about the first stock, I wanted to teach you about a documentation format that we use in the medical field. We call it a SOAP note. So S is subjective. This is information the patient tells you, such as their feelings, symptoms. Sometimes they'll tell you a little story about what happened and what led up to it, those kind of things, right? Next up is the objective information. This is the hard data like an X-ray, lab results, vitals, CT scan, etc., that the medical professional can observe. Following the A in SOAP is the assessment. This section includes the interpretation of the above data points, which are used to make diagnoses. And then the plan. This section describes the clinician's recommendations to treat or resolve the above diagnoses. So the first stock I'm buying in 2026 is going to be Meta Platforms. But before we get into it, I have a quick question. Have you ever played the game Telephone? So you know how when the last person hears a message, they say it aloud for everyone to hear, and it's just completely changed into something so far away from the original, it's hard to believe that it ever, got there. Um, yeah, that's the subjective data that I'm getting regarding Meta. I feel like about every other day I hear information or I see something on Yahoo Finance that is just has a really negative opinion, and I'm positive that I've done the research that I need to, and CNBC, Wall Street, whatever you want to call them, the media, their end of shift report just does not match up with my assessment whatsoever. Similar to my investment in Google last year, the patient or the market is repeating the same fears. I consistently hear or see articles titled Reality Labs, AI Spend, Zuckerberg's Overspending, the pending 33 state litigation against Infinite Scroll for children. There were fears that FTC is going to break up Instagram, the 83% net income drop in Q3, and the depreciation from all of the GPU spend. It's funny, though, that despite this, there is a 100% buy rating on this stock from analysts, and the average price target is somewhere around like $1,100 for 1 year, which just really contradicts, all of the vitals and everything that we've been able to verify. So yeah, let's go over those. We've heard the fears, but these are the vitals that I've obtained. Wall Street is afraid of the Reality Labs spending, but the revenue grew 74% in Q3. Smart glasses sales are up 200%. While the lawsuits do have a real potential to lead to a settlement, Meta has $44 billion in cash, so even a $10 billion settlement is just 2 months of profit. In regards to the Instagram fears, that has already been resolved as of November 18th. A federal judge ruled in favor of Meta. They don't have to break up the company. When we're looking at the net income loss, this was a one-time non-cash tax expense. If you exclude this, Meta's profit actually increased to $18.6 billion. And the depreciation schedule that Meta and other companies, by the way, have set to depreciate the GPUs. For one, it actually buffs up the numbers short term. Okay, so now that we've addressed all of the subjective claims, here are a couple more vitals that just show how strong the company is overall. Even after the 2025 increase, the stock trades at a forward PE of 24. We can compare that to Costco at 30. Next up, we have Llama 4 open source model is effectively forcing the industry to build on their standards. We have the fact that WhatsApp monetization just began. The total revenue growth in quarter 3 was 26.2% with a normalized EPS growth of 20.2%. And the daily active users or family daily active people is 3.54 billion. 3.54 billion with a B people log on to Instagram, Facebook, WhatsApp on a daily basis. That is an 8% increase year over year, which is just unfathomable when you're talking about 3.54 billion. Let's get into the assessment. Sorry, I went a little crazy there. So, just like Google last year, Meta is undervalued, being held back by fears that I believe are overemphasized. This is occurring while the vitals of the company couldn't be stronger. WhatsApp is a pay-per-conversation model and should only continue to improve revenue margins and EPS. And despite how I personally feel about social media, the daily active user numbers are astounding. The growth is unbelievable for the sheer quantity of people already included in the base number. And clearly people just cannot stop using these apps. That's great for making money. One last thing, this is more of a moonshot, but with everything else underneath, this is just like icing on the cake if it does come true, and if it doesn't, then no big deal. But I do have a sneaking suspicion that AI accessories like glasses, and maybe we move to like watches, rings, and a couple other things could really start to be the replacement of cell phones. And Meta is years ahead of the competition. So we are going to check out my projections as part of the assessment, but in order to do that, I do have to explain a few things. So I had to edit the trailing 12-month EPS in Qualtrim to remove the one-time expense. It reduced the trailing 12-month EPS by about $6.02 total. So in order to get a more accurate projection, I made that change. But because of this, I also intentionally kept the numbers very conservative. So both of these cases are far below what I actually believe could happen. So that's going to take us to our base case, which, if I'm completely honest with you, could easily be a bear case. And we are going to project out a 15% EPS growth rate. The most recent quarter was 20.2% earnings per share growth rate. So if we were to go down this far over the next 5 years, it would be quite honestly very disappointing. And because of that, I have the EPS multiple at a suppressed level all the way down to a 22 where it trades. That's actually the 2-year forward PE. But even under those circumstances, as you can see from today's price, that would actually net us a almost 14% compound annual growth rate, which would put the stock price at about 1,280 after 5 years. If we were to keep the growth rate and give it a more reasonable earnings per share multiple, we could go up to 25. Whoa, not 225, up to 25. And that would adjust it to about 16.84. Or we could give ourselves a more reasonable earnings per share growth rate, and we're going to say that it does still actually decelerate, but we're only going to take it down to an 18% growth rate. And if we keep the lower earnings per share multiple at about the 25, that actually takes us to about a 20% compound annual growth rate from today's price, which at the end of 5 years would put us at 1,650. So we'd literally gain 1,000 for every share that we had from today's price. Or after about 3 years, we would have just under doubled the stock price. And again, we can even adjust the EPS multiple up a bit if we decide that that's too low, and the numbers start to look really, really good. But like I said, I wanted to keep it kind of conservative. So we'll just take those first two examples. That being said, it's also very important to remember that at any time, Zuckerberg could drastically cut spending on AI and the margins could absolutely skyrocket. This would make these numbers completely obsolete, and we would have to start looking at like 22 to 25 compound annual growth rate for earnings per share. And yeah, it just gets crazy. So before we go over our plan, since we've been doing our SOAP note, I would like to have everybody hang out in the waiting area while we check out our second stock real quick. This one will be quick, I promise. So for the second stock that we're buying in January 2026 is going to be Weyerhaeuser. I know I've talked about this company a lot recently, but it is just absolutely everything that I need it to be. It fixes all of the problems in my portfolio being very, very tech concentrated. It gives me exposure to real assets. So if we start seeing massive inflation, this stock will actually hedge the portfolio against that, because as the price or as the dollar devalues, the lumber becomes more and more valuable, or you have to spend more and more dollars to get it. So it balances out that. That being said, despite it being a REIT or a dividend stock, it actually does have the capability to appreciate like a growth stock. And it does give us more exposure to the rebound in the economy that I'm expecting, especially in 2027, 2028. And like I had mentioned, it is a REIT, so it's a dividend stock, which helps provide me with cash to buy my growth stocks. Because, like we mentioned at the beginning, I have a very limited amount of money that I can actually invest with anyway. So any extra just really helps, push us closer and closer to that goal. So let's go do our monthly checkup on Weyerhaeuser. All right, so for our Weyerhaeuser checkup, this is going to be the first month that we actually do input the data, and I did this today, but the data has been available for a bit. The housing market index has actually increased by about 4 points over the past month, which is really good news. Building permits are down. Now, I have a note here. The permits are November's data, which is behind for a multitude of reasons. This is a data point we will continue to watch over the next few months to verify if it stabilizes or rebounds. And while it is slightly concerning that it's going down, I really can't expect to be timing the bottom perfectly. I'm starting to accumulate now because I expect future growth. When I say future, I do mean like 2027, 2028. This isn't going to be like immediate. So I'm really trying to build up that position now. And on top of that, the lumber price has stayed pretty much the same over the last month. So our action is to accumulate. My buy price is under $24.50, which the stock is currently at. And that's going to take us to our plan. So my plan for contributions to my portfolio this month consists of a 50-50 split between Meta and Weyerhaeuser. I honestly believe both are screaming like pounding the table buys to hold through at least 2027, 2028. So everything in today's slideshow were basically cliff notes from my main research documents. If you'd like access to those, please do visit the pinned comment down below and visit our Patreon. You can get access to all of my research reports. I update them effectively, as efficiently and promptly as I can. And while you're down there, if you could please hit the like and subscribe button, it would just do me a huge favor. So this morning I read that more and more of Wall Street's analysts are becoming bullish for 2026. And when everyone is expecting greatness, that usually leads to the opposite. Any small miss is going to cause major drama. So because of this, I'm looking at 2026, and especially for the first half of the year, I'm expecting a ton of volatility. But don't panic, stay focused, buy the dip, and 2026 is ours. Shifts over.